How many of us really truly understand what our homeowner's insurance policy covers? Like, are we prepared in the event that our insurance company does not cover something? Do we understand what we're even getting for our money before we sign on the dotted line?
In the past, I'm in the future. You mad that they don't.
Thank you all so much for clicking on this video. If you're new here, my name is Kela Trishaan, and I make videos on lifestyle, womanhood, and mental health. And if you are returning, thank you so much for coming back, and thank you for your support. So if you saw my video last week on auto insurance, I did say that I wanted to start a little mini series, depending on what the response is on these videos, to give information on how to read and what's covered on your auto and homeowner insurance policies. As I've explained before, I work in the insurance industry, and what I've found is that a lot of people don't truly understand what type of coverage they have or what type of coverages they don't have until they actually have a claim. So today I'm going to be focusing on just some basic things to know about your homeowner's insurance policy. So if you are interested, go on ahead and stay tuned. Okay, so as I said before, I practice insurance in California. So the information that I'm giving is based on my experience dealing with California insurance policies. Things can differ from state to state. I am in no way speaking for a company. I am just simply giving general information, again, based on what I know and based on my experience and where I see that people a lot of times don't understand particular portions of their policy. So what I want to start with is the different types of policies. Okay, so the most common type of policy is going to be your basic homeowner's policy. This is usually a policy that covers a single family dwelling. Under that coverage, you usually will have coverage for your home up until it becomes a total loss. So God forbid you have some type of natural disaster or fire, something that happens that causes your home to be no more. Your insurance will typically cover your home up to the value of your home. With that coverage, you also have what's called other structures coverage, and that usually covers like a fence, if your fence gets hit, or wind damage, or if you have a garage that's detached from the house, it'll cover that, things like that. If you have that type of coverage as well, usually you have a certain amount of property damage. Basically covers property that was damaged inside of your home for a covered loss. And then you will also have what's called loss of use coverage. And that just basically means that if your home is uninhabitable for whatever reason, there will be a certain amount of money allotted for you to go and stay elsewhere while your home is being fixed. Okay, so the second type of coverage is going to be a condo policy. It's called different things at different insurance companies, but basically a condo policy is a little different because, a condo basically is an apartment that you buy. Like, you are on site with other people, you're in a building, and you only own a portion of it. You only own your unit. So you have coverage specifically for your unit. Depending on how your HOA's legal documents read, sometimes the HOA will take care of different things inside of your unit that your insurance company may not, and vice versa. That's a whole separate topic, but usually your insurance policy for your condo will cover the inside of your place only, and it'll cover your property inside of your place just like a regular homeowner's policy would. Oh, and before I forget, so with that condo policy, you also do get loss of use as well. If something happens and your home is uninhabitable, usually your insurance company will jump in and they will be able to cover a certain amount of days or weeks or however long it takes to get your home back in order. You will be able to stay off site. Okay, so under the homeowner's umbrella, there are two other policies. There is the tenant policy, and then there's a landlord policy. Now, if you have a tenant policy, that is typically like renter's insurance, for example. So if you live in an apartment, a lot of times they recommend that you get renter's insurance because your landlord's coverage for the building is not going to cover your personal belongings. So if anything happens in the building, if your personal belongings get damaged, you're not going to have any coverage. But if you have rental insurance or renter's insurance, then that insurance will kick in if something happens and take care of the property inside of your home that belongs to you. Now, the landlord's policy is kind of the opposite. So that basically is coverage for the building, but not the property inside. So if your landlord, or your landlord should have a policy that if anything happens to the building, they have an insurance company that will jump in and cover whatever damages. That policy only covers the building and different structures around the building that belong to the landlord. It will not cover anything inside unless they are items that specifically belong to the landlord. Okay, so the next topic that I want to discuss is maintenance versus unforeseen damage. So, your homeowner's policy is not a maintenance policy. What that means is that there are certain items of a home that need to be maintained over a certain period of time. And if the damage that you're experiencing is due to you not maintaining that, you will not have coverage. If there are some type of unforeseen circumstances, sudden and accidental circumstances, then those are things that your insurance policy will cover. So the best example I can give for that, two examples actually, is roof and pipes. Now, when it comes to pipes, if your pipes are old, like let's say the life expectancy of your pipes are 30 years. If your pipes are now 40 years old, it is expected that after the 30 years, you would have to replace those pipes or do some type of maintenance work so that you don't have any issues. Now, if you do not maintain your pipes and you have a loss, it's not to say that that loss won't be covered, because it would technically be a sudden and accidental occurrence if, let's say, the pipe burst, but you're not going to have any coverage for your pipes themselves. You would have to take care of your pipes. Your insurance policy would take care of the resulting damage if it's something that, again, is unforeseen. So these are going to be questions that your adjuster will ask you when you come out. How old are your pipes? Have you had any recent work? Things like that. I kind of explained it already, but unforeseen damage is going to be something that you obviously couldn't have planned for, something that's an accident. Maybe there was some type of trauma. Maybe someone ran into your home, like there was a vehicle that hit your home and caused major damage. That's obviously something unforeseen, so that's something that your policy would cover. But something that you're supposed to maintain is not going to be covered by your insurance policy. Now, same thing with roofs. If you have a roof with a life expectancy of 25 years and your roof is now 30 years old, you haven't done any type of work or any maintenance on your roof, and now you have a leak that is causing damage to the inside of your home. If it's determined that the damage is caused by lack of maintenance, then you are not going to have coverage for your claim. If it's determined that something sudden and accidental happened, like maybe a tree fell on your roof and caused an opening, something like that, then you will have coverage. So it's important to know the difference between the two, because your policy will not cover maintenance. Your policy will cover unforeseen accidental damage. Okay, so the next topic that I wanted to discuss is water damage. What water damage is covered and what water damage is not covered. Again, this can differ from state to state, but I'm speaking for California. Now, I am in Southern California specifically, so we don't typically get a lot of rain, but we're in that season now where you're going to get more claims due to rain. If you have like a roof leak or something like that, you probably wouldn't know you had an issue with your roof until it starts to rain. So this can make this video extremely long, so I'm just going to give a kind of like a brief description of what's covered and what's not. So similar to what I said before, where if you have a sudden and accidental situation that happens, the most common thing that will happen is a pipe burst, causing some type of damage to the home. It could be a toilet overflow. It could be like some type of storm created damage that caused water to come inside of your home. So the example that I used previously, where if something hit your roof and that caused an opening, that's something that would potentially be covered. Now, water damage that is not covered is if water is coming into your home due to a lack of maintenance. That would be that roof situation, or even if you have some type of seepage coming through like a wall. If you have something that has not been maintained, that is not going to be covered. Also, what's not covered is I've seen where homes are sitting maybe below ground, and when it rains, the water will pool up and kind of seep into your home. Those things are not covered. That is a maintenance issue. So you have to be mindful of that. And these are things that you need to think about when you're purchasing a home. These are things that you need to look at, because there are so many different like pockets of coverage that people think they have that they actually don't. So if it starts raining and there is no evidence of sudden and accidental trauma to your home, and water gets into your home, that is not going to be covered. But if you have something that was just kind of a freak accident, something that just randomly happened, that's something that the insurance company will offer you coverage for. Okay, so the next topic that I wanted to discuss is estimates. So for some reason, when the adjuster writes an estimate for a customer, more often than not, the customer thinks that they are being lowballed, or the customer thinks that their contractor is charging more and the insurance company isn't willing to pay for it. Like, what is that all about? So let me just kind of explain to you how it works. So typically, the insurance company will use a software that kind of spiders the internet in a way. And so depending on what area you live in, when we put in the measurements for materials that need to be replaced, when we put in labor, it will look at the average cost of the labor in your market area. So the idea is that you're not going to get the highest price, you're not going to get the lowest price. It's going to be somewhere in the middle. It's going to take an average. Now, an estimate is an estimate. So the insurance company does understand that in some cases, depending on what type of work needs to be done, maybe the adjuster didn't take into consideration, because they are not a contractor, that this needs to be moved for this to be done properly. So it would be an additional $500 or whatever, just an example. As long as that is explained and it makes sense, your insurance company can enhance the value or add what needed labor or work needs to be done to the estimate. What cannot happen is your contractor come to the adjuster or the insurance company and say, hey, we actually need $10,000 for this. You're only giving $5,000. I'm not going to do the work. The insurance company needs to understand why this money is needed when our estimate is saying this. It's not saying that we're not going to pay. We just need to understand why whatever work is needed and why your estimate is so much more than ours. I hope that makes sense. But if you have a situation like this where your contractor is charging more than what your insurance company is giving you, usually it just takes a conversation, and it takes your contractor to be willing to explain what work needs to be done, so we can make sure that we are on the same page and that we get you enough to fix your home. Okay, so the last topic that I want to discuss, I touched on this in the auto video, and I wanted to touch on it here as well because it comes up. But it's basically, if something was not my fault, why am I still having to pay my deductible? This is important because I just don't feel like this is really something that is understood. So the example I'm going to use for this is a vehicle hits your fence and damages your fence. So you go through your insurance policy to get the fence fixed, and you have an adjuster come out, they take measurements, they create an estimate for you, and your deductible is $1,000. So it's $10,000 to fix your fence, and the insurance company is taking $1,000, so you get a check for $9,000, and you're responsible for your $1,000 deductible. A lot of times the rebuttal that we will get is, well, why am I paying my deductible when I didn't hit my fence, someone else hit the fence? Good question. It's very similar to auto insurance. If you are going through your insurance company, you are bound by a policy. It says that if something happens, if you have a covered cause of loss and you come to us for payment, we will come out, we will do a inspection, we will review everything, and if everything is covered, we will cover anything over your $1,000 deductible. Again, the deductible is what you chose, and you signed on the dotted line saying that if anything happened, I'm responsible for this amount, and then you will pay me the difference, you being the insurance company. Now, if you do not want to pay your deductible, or if you don't have the money for the deductible, a lot of times that happens where they're like, it's not my fault, I don't have the money for this. Completely understandable. In that case, you will need to go through the carrier of the person that caused the damage. So in this case, with the vehicle, that's where the property damage and auto insurance, that's where that comes into play. So you would need to go through that person's carrier in order to not be responsible for a deductible. Now, that can be tricky because sometimes it could be a hit and run. So you may not have information on the other person, or you may not have a person that had insurance. Those things come up. Unfortunately, in those situations, you're still going to be responsible for your deductible if you're going through your insurance company. So that's kind of the best explanation I can give, and I hope it makes sense. Okay, guys, so I know that that was a lot of information. Again, with these insurance policies, it's so much and it can get so deep. So I just wanted to kind of scratch the surface and just give some information on the common things that come up that I've seen. If you have anything specific that you want to know, please go on ahead and leave it in the comments below. I will do my best to answer the question or at least point you in the right direction. If you enjoy videos like this, go on ahead and give me a big fat thumbs up. Not only does it help with the YouTube algorithm, but it will also help get this information out to other people that may need it as well. If you have made it this far and you have not subscribed, go on ahead and click that subscribe button below so you don't miss any of my future uploads. With that being said, you guys have an amazing day, and I'll see you next time.
You leave that in the past. Leave that broke up in the past. Leave that dumb in the past.